Hey guys, this is Andrew for TRENDLINES.com. So in this video I want to make something a bit different. I won't be starting from a chart where I already have all my indicators and where I already built all my levels of support and resistance, but I'm going to start from scratch and try to explain to you guys how to do technical analysis from the very beginning. Let's get into it. Alright, so I start with a chart of the S&P 500, for example, and as you can see, I don't have anything on this chart, so I'm using TradingView. So we're even going to start from even before. When you go on TradingView, okay, you arrive here, you go to charts, and then you can choose here any kind of security, so SPX, for example, but you can choose as well Euro USD, as you can see. Bitcoin, you have everything you need here to make technical analysis. So let's do it on the S&P 500. Okay, so this is, all my drawings because it's saved on the S&P 500. Let's start from scratch. All right, so here I don't have anything. Here you can go to settings if you don't like the settings the way they are. I, for example, prefer to be in dark, and I like to have a gradient from dark blue to black. All right. This is for me more like a trading style. All right, so then you need to add first thing moving averages. So moving averages are basically indicators, so you can click here. So depending on the subscription you chose on TradingView, you won't be able to use more than 3 or 5 indicators. But I think that for a decent price, I think the first subscription is around 10 to 15 US dollar a month. You already can use a lot of them. You just can't combine them all together, which is not an issue. So for example, here I want moving averages. So so just type, moving average, and let's see what you have. So you have the exponential one, the weighting one, or the simple one. I like the simple one, but actually, guys, up to you to choose exponential or weighted, and then you need to see where you have the more reactions. If an indicator has a lot of reactions in the past, then it means that this is the one that is working the best in this kind of security. So me, I like simple moving averages. So I'm going to choose 1, 2, 3 of them. Okay, so here I have my 3, so it's 3 times the same, and then I'm going to modify. So I go to settings. Then lengths, I like to have a 20. I do the same here, a 50. So it's a 50 period moving average. And the most used one by traders, guys, it's the 200 one. This one is used as an indicator by big asset managers. And for example, when you have the 20 and the 50 on the same chart, so here, let me change the color. All right. Okay. So the purple one and the yellow one, it's the 50 and the 200. It's what we call the golden cross, guys. This golden cross, when the 50 crosses the 200 moving period average, it gives signals of buying or selling that are followed by a lot of big money investors. All right, like BlackRock, for example, any kind of big asset manager, they follow this. So we're going to add one more indicator that for me is crucial, is the MACD. All right, so you add the MACD. All right, so the MACD, for those who don't know what it is, so basically you have 3 curves here. The blue line, so it's 45.8 right now. Then you have the exponential moving average of the MACD itself, which is a 9-day exponential moving average to have like a smoothed MACD. And the signal is given by the crossover of those 2 lines. So for example, the difference is here in green or red. So if it's red, it means the MACD is trading below its moving average. So the blue line is the MACD here, and if it goes above, here you have the cross, then the MACD signal becomes green and it's a buying signal, and the signal is given by this. But you can't follow just stupidly this signal, it is not enough. I did some back tests on the MACD signals. It's basically generating a nice 2% yearly, but the Sharpe ratio, which is the performance divided by the volatility, is not good because the volatility of your PNL is very high. So the MACD is not usable just by itself, but you're gonna see how I like to use it. It's actually for me a nice indicator to be associated with the market, with the price action of the market, because it can give you some signals, some early signals of reversals, which are called divergence. All right, I'm going to go through divergences very deeply in my futures video, but for now, just keep in mind that the MACD is very useful when it's associated to the price action, and not just to be used by itself. So here I have my chart. I have all I need. I don't like to use RSI or stochastic. Those things are actually, to me, they can be useful, but all the information they have is already here. You just need to know how to read it. So I don't like to get my charts busy with a lot of things that actually then would just make your mind not clear about the signals you see. So then let's focus first on the moving averages. So I want to find so I'm on the daily time frame. So for example, I want to find what are the ones that have the most reactions. So what I can see, for example, is that the 200 period moving average, look how beautiful are the reactions I have, for example, here. So you see in 2016, July, 1, 2, 3, 4, 5, 6. So, you know, I can zoom in a little bit here, but as you can see, the whole year we had multiple reactions. Each time it was a success. If you were a buyer on the 200 period moving average with a tight stop loss just below, you would have generated a lot of profits. So this is telling me that the 200 period moving average is very good to use. So the simple one is very good to use on the chart of the S&P 500 for long-term investments. So basically, if you trade above, you wait for a retest and then you buy it. So for example, here, I won't be a buyer here, guys. You know, as a long-term investment, I would be a buyer if the price comes back to the 200 period moving average. Here, I would be a buyer. Here, I would be a buyer. I'm not a buyer at 36.50. All right, for short term, yes, but we're going to go to the short term as well. But for the long term, I'm not a buyer here. So this is how you can use the moving averages. You know, they can give you some signals that are, to me, quite clear of buying and selling, and they tell you what is the momentum of the market. If you trade above, the momentum is positive. It's also given by the MACD. Usually this goes together, sometimes not. These are divergences, but here it's the case. So now if I go on the shorter term, so let's focus on what is happening, for example, here, and let's see which moving average is playing as support or resistance. Okay, try to see with me, guys. Try to see with me. Definitely, the 50 is useless, right? You can see it has almost no reactions, no clear reactions. But the 20 has a reaction here, then it got broken, all right? You see, guys? Look like the 20 is playing a nice role of resistance first, rejected, quite brutally, by the way. You know, it's like 6%, all right? This is serious. So rejected brutally, then we retest, and then we blow right through it with a massive move up. And once it's retested, it goes higher. Here you have kind of a bear trap, but whatever. We have already two nice reactions. Then here, 1, 2, 3, kind of, you know, not very clear reactions here. This was very messy. This was full of bear traps. I remember here I was thinking the market would go actually lower for other reasons, for some trend lines reasons, but the 20 period moving average would give you some false signals here as well, but you don't care. You know, if you have a stop loss, you just lose 1, 2, 3. But here you would have, if you risk reward, that's why it's important to get a big risk reward, at least above 3. You can lose 3 times and win only once, and then you are profitable. I mean, you're not losing money. You know, you're right, only 25% of the time is enough not to lose money. So this would work here, and then look here. one reaction, two reactions, three reactions, and look what move you could take. So guys, this is only by using, you know, very basic moving averages, 14%. All right, maybe you would have taken your profits before, but whatever, here you make money, guys. If you just follow, you know, the very basic use of moving averages. Okay, this is the kind of easiest thing you can do. This is for beginners, and this is already very efficient and can generate big profits. Then let's keep like checking what is happening on this 20 period moving average. So here, if you play the rebound, all right, you got stopped, but here then you are below, you can play the move down. So you see, same thing. Once a support is broken, it becomes resistance, and here you look, support broken, retest, resistance, and then bam, we go lower again. Nice profits, guys, to capture 6%, seriously, in a matter of like 1 week. All right, some like intraday traders would love to have this kind of returns, and they use much more complicated stuff. This is the very basic, and once again, I can guarantee that the 20 or the 50 or the 200 would work, but what I can guarantee you guys, if on the chart it has worked well in the past year, 2 years, then there is a high probability it works well again in the coming month, years. All right, this is technical analysis. This is how it works. So here, let's keep checking the 20, what kind of signals it gives us. Here, bullish. So here, okay, you miss this one, you miss this one. So basically you miss 1, 2, 3, 4, 5, 6, 7. You miss seven trades, and you can make so 1, 2, no, this one, no, 2, 3, 4, 5, and here you would be a buyer. All right, around 36.30. And look, guys, this is exactly what I said in my analysis on the S&P 500 I did yesterday. I said I'm a buyer at 36.30, and I didn't use the 20 period moving average. I used different tools, but it all goes to the same thing. All right, so when you have different indicators that give you the same information, then it's more likely to be true, to happen. All right, so for the moving averages, I think I'm done. I mean, you know, it's not rocket science. It's not more complicated than this. You just check those that work well in the past days, weeks, month, depending on the time frame you want to trade, and then you you build some trades you wait for the price to trade above, and then you buy the retest, all right, with a tight stop loss. This is what you guys need to do to make profits. Here you would have half winners, half losers, but with risk reward around 3 to 5. So basically you would have generated a lot of profits. Okay, and this market was not easy. We need to use for example trend lines to make some obvious, let's start with easy, you know, some obvious areas of support and resistance. So for example, I would use here, you know, it's just about connecting the highs and the lows of what you see and see if it makes sense. You know, it is exactly the same as moving averages. If you don't have a lot of reactions, then it means nobody cares about it. Then it means that the other investors are not using it. So here, for example, I can do a nice trend line here, guys, you see, bam. And why I like this one? Because I have 1, 2, 3, 4 reactions, all right, on a 2-year chart. So it's a lot, all right, it's a lot. So this one is of course nice to use, and once you have this, it's gonna work, you know, for a long time, you know, because this is a 2-year move, guys. So a 2-year move has a lot of inertia, you know, it has a lot of to go against this kind of move. You need a lot of things to happen in the market, so investors think differently. But for now, this is the trend. This is like kind of the highest scenario that can happen to the S&P 500, and it goes to 3,800 in May 21. So all those who say, yeah, like I heard for example Goldman Sachs saying we're gonna have an S&P 500 at 4,200, something like this in the middle of next year. I don't believe it because of this, you know. So this is just to create greed in the market, guys. I don't know where they get the information, but I can tell you that the S&P won't be trading above 4,000 before next June, all right? Because I mean, you never know what will happen, but it's very unlikely. And how I know it? Just by doing a trend line, all right? Then, what other trend line you see? So let's make some horizontal ones. So you need to find some pivot points, all right? So here I have a maximum, and you can see that here I have some minimum. So if I just do like this, bam, I have 1, 2, 3, 4, 5 reactions. Nice, 5 reactions, I like it. I know this is very visible, a lot of people use it, especially it's a horizontal trend line, so everybody always agrees on the horizontal trend lines, you know, they're not tricky, they're very obvious to see, and definitely, look, the 200 period moving average will be trading here around Jan or Feb. So guys, I was talking about a massive correction of this whole move up, and I know where potentially it would go, to the 200 period moving average, because it always comes back to the 200 period moving average. If I take this chart on the very long term, we are never far from the 200 period moving average. We can, you know, be extended a bit for a while, even for 1 year, but ultimately we come back to it and we retest it. All right, this is how things happen. Forever it has been like this, it's still going to be like this. So if you are too far from your 200 period moving average, it means you are too much extended. This is the same information you would have in an RSI. Guys, why would you need to use RSI when you can just see it? It's visual, all right? Here, I would be a buyer, like I mean in the long term, I would be a massive buyer at 3200 level when the 200 period moving average will be there as well. So I have a double signal, all right? Then if you want to go a bit deeper, you can use ELLIOT, all right? So ELLIOT is another level. So I'm just gonna go very quickly through this here, but once you have identified some resistance, some support, so using the moving averages, using trend lines, then you kind of need to understand what is happening in this market and where are we heading and where are we in terms of development of the waves. And so we take ELLIOT, all right? So I take 1, 2, 3, 4, 5, and I try to measure 5 waves in this move up, all right? So 1, 2, 3, 4, and 5. So ELLIOT wave theory is not easy. So basically it's about understanding where we are in terms of development of the waves. So for example, you have some tricks that help you to do your counting. The third wave must be the most impulsive one, the most strongest, like the strongest one. So here definitely, you know, this is a 3 because you can see how powerful this move up was. So when you have this kind of move, you know that this must be a third wave. And then you never know if actually the whole move is finished. So for example, this is when we need to combine trend line and ELLIOT wave formation. For example, here, I wasn't sure if it was a 3 or maybe if it was like this. It could have been like this, guys. You know, 1, 2, 3, 4, 5, and then here I have a correction. And I was thinking this might be the case. But what told me this scenario is off the table is actually when we broke here. You see, when we broke this trend line on the upside, retested it, I was a strong buyer here. This was my first video I did on this channel when I predicted that there was gonna be a strong bull rally, a strong rally in the coming month, and this was 1 month ago. So I was right about that, and I'm pretty sure that I'm right as well when I said that we're gonna have a massive correction in Jan or February, maybe February or March. Doesn't mean the end is gonna be bloody. Just means there's gonna be a massive correction. Maybe then things are gonna go better. I don't know. I'm just telling you guys that this move up is almost done. And this I know because I use ELLIOT, all right? Then another interesting thing about ELLIOT, guys, if you want to know if a wave is finished or not, or if a whole move is about to be done or not, then you can use the MACD as a leading indicator to be associated with the price action that we call divergence, all right? So let me show you guys what is a divergence and how I would be using it here. So as I said, I identified that we are probably in the 5th wave of ELLIOT formation, especially that usually 5th wave are weak So for example, a diagonal is weaker than an impulse. And you have some signals that the market might be shifting soon, like a divergence. So let's go to a divergence. So to find one, you need to take a momentum indicator. So here the MACD, you measure the high, the two highs between a period. So here I have a high at 80 and here I have a high at 60. All right. During this time, the market went from, so I take the exact same time, guys, here to here. So the market went higher. So this is a divergence. You see, the price action is bullish, we go higher, but the momentum indicator is shifting down. So you have already some information about the flows that are reverting, that there are some profit takings and maybe even some short positions getting built in this market. And trust me, there are probably. Even if everybody is bullish, you know, some guys, the smart money has already, I think, gone from the massive flows we had here. The smart money was here, invested here, and the smart money is now offloading the positions. I think so. You can even have a divergence even bigger here, from here to here. All right, but this takes two waves in one move. It's not easy to read information in this, but anyway, you can see that the market is losing steam. For example, here you had the same divergence between here and here, here and here. So that's why we went lower, and actually the market got some fresh energy back at the 3200 level and it went higher ultimately. But what I'm saying is that when you have those kind of patterns associated, here we didn't have any ending diagonal. This was an impulse, guys. All right. What we have here is very different. It's an ending diagonal. For those who don't know what is an ending diagonal, please click on the link in the description of the video, and you're going to receive a free video that I'm actually doing right now. It's going to be amazing, where I explain everything, every techniques that you can use in Elliott wave principle to actually find out where we are in terms of wave development. You have some tricks, for example, like a zigzag in a 5-wave move up. If the second corrective wave is a zigzag, then usually the fourth corrective wave is a flat. Zigzag, flat, all right? So here it worked, and it works actually quite often. Here we have a combination of a divergence between the price action and the MACD, together with an ending diagonal that is actually converging at the trend line resistance level that is lasting for the past 2 years. So I have three kind of information together that tell me that in Jan or Feb the market is going to reverse badly. All right, so nothing 100% sure, nothing guaranteed, but this is what my tools are giving me. So I repeat very quickly, what you need to get on your charts is moving averages, 20, 50, 200, simple, weighted, exponential, it's as you wish. Just, you know, I showed you guys how to change it. You just go to settings and you can change the, you know, the time, for example, the close, high, open, whatever. You have all the different features here, and you choose the ones that have worked the best in the past weeks, months, years, because usually they're gonna keep being the ones that are working the best. Then you build some support areas, some areas of support and resistance by using trend lines. The most basic one, horizontal or even sloping, it's fine. And then you use Elliott wave principle to kind of know where you are in terms of development of the waves and where this market might be heading. You can associate this with some momentum indicator and trying to find some divergences. So I hope I managed to make myself clear. This is not that simple, but trust me guys, if you practice this on a daily, even weekly basis, you know, if you just use your brain to your mind to like kind of, you know, find the right counting, it's not going to be correct the very first time for sure, but with time it's going to be even more and more obvious for you guys to understand what are the wave formation. So that's it for me. Thank you guys, and stay close to shore.